Hello everyone. Welcome to our channel. Bisu this side. Today we are going to discuss the concept of bills in arrears and bills in advance, and I'm going to showcase you in the system how it works actually. This particular functionality, and what is the implication of having this functionality. There are two rules actually. In AR, we have bills in arrears and bills in advance. There will be a subscription kind of a method. Normal in 3 months or 6 months or 12 months, based upon on that front, we can raise the invoices to the customer. The revenue recognition will be in two different ways. We can do the revenue recognition. One is a fixed one, fixed schedule we can have in terms of both the processes areas in advance, and we have also you know deferred also available. Okay, so we can defer the revenue recognition as per the actual accounting month of the service that we raise the invoices or revenue has been recognized. So let us see both the processes. So bills in areas, what happens is that we provide the service to the customer, right? And we raise the invoices after completion of the due date. So say for example there is a 3 month schedule is there. Okay, so out of these 3 months, say for example in the month of June, I am going to provided the service to the customer, and my revenue has to be recognized. So the accounting entry will be like more of unbilled receivables to the revenue, because my revenue has to be recognized in the month of June. Same in the month of July also, my revenue has to be recognized in each of the month. However, I have not raised the invoice because it is the process here we are following is bills in arrears. So this is the process we are following. Now in the month of August, whenever I'm raising the invoices, raising the invoices to the customer, what happens is that the receivable comes into the picture whenever you raise the invoices of the transactions for the customer. For the 3 months, we have 100 for each month, say for example, right? So the receivable is 300. So this unbilled receivable for the customer, where we have provided the support service to the customer. So for that, this unbilled receivable will get knocked off for these 2 months, 100 each year. It will be getting credited this side, and your revenue for that month, August month, also it remains same 100 each. Okay. Then next, whenever you get the receipt, it will be either cash or confirmed cash kind of a scenario. Okay, confirmed cash to the receivables. So this is the wholesome scenario in bills in arrears. Okay, and what happens in bills in advance? Normally, we raise the invoices. Say for example, June, July, August. So in the month of June, we raise the invoices. However, for the next subsequent months, right? For the July and August, we need to you know revenue has to be recognized for those months also. So what happens is that whenever we do the billing, it will be more of like receivable your total amount for the 3 months. For the June month, we calculate the revenue for the June month, and the remaining 2 months, whatever we are doing the billing in advance, right, to the customer, it goes down to the unearned revenue account, right, because this revenue has not been earned for this June month. So subsequently, when we have for July month, the revenue it gets recognized, right? The unearned revenue. Here you can see while doing the invoice, it will be this, and the next month it will be more of like unearned revenue to the revenue account. Okay, and same applicable for the month of August also. Same schedule. August also you'll have the unearned revenue to the revenue. Ultimately, your unearned revenue gets nullified. In terms of the accounting entries, as you can see over here. Um, Again, you get the confirmed cash in terms of the receipts, and we are going to see into the system how it works actually. This is overall picture of how a accounting rules in terms of arrears and advance works. Okay, so we are going to see into the system now. In today's session, we are going to see the accounting rule for the accounts receivable module, which is bills in arrears and advance. How it works and what are the accounting impact, we'll see today. Okay. So I'm in the receivable module. Click on the billing part. Click on this task list. Click on create transactions. Now, as you can see, this is the transactions window. Create transaction. You have invoices over here. The class is invoice. Business unit, you should use the US business unit 1, and transaction source is manual and invoice. Let's provide a transaction number here, and here as you can see, transaction date is there, accounting date is there, salesperson not required, invoicing rule is there. So we have two types of rule, in advance and in arrears, right? So what happens in advance, actually you are doing the billing in advance, and you are getting the receipt from the from the customer as well. So say for example, you have 3 months subscription, right? June, July and August. So in advance, we normally do the invoicing in the month of June itself. Rest of the 2 months like July and August, we do not recognize the revenue in the month of June, and it will be recognized this revenues subsequent month like the July and August itself. Okay, so let us see how it works. Actually, click on in advance. Provide here there is a customer name, Reliance. Now as you can see, description provide service for 3 months. Okay. Now here you can provide quantity 1, unit price is 3000. Click on here revenue scheduling. This is very very important. In the revenue scheduling, if you click on this drop down list, you are going to get the designated provide by the Oracle itself. These are all seeded one, seeded informations provided by Oracle. However, if you want to create on your own, you can create so. Okay. So as you can see here, 3 months fixed is there, 3 months deferred is there. We are going to use the fixed one. So what happens in the fixed one? The entries gets generated itself. Every at the time of doing the invoices, and every month, right? You'll have those accounting impact of revenues, being recognized or not. Deferred every month, you can once you do the billing for the month of like June, July and August, you need to run a separate program, revenue recognition program. It is going to recognize your revenue accordingly. So you are going to use the 3 month fixed here, and let us see now the start date. So say for example, I'm going to give June month, June first week, and here also the start date provided by June 1st. Now simply save this one. So once the transaction gets saved, we need to run the create accounting program. The default remit to address was not populated. Enter the valid remit to address. Okay. Provided the remit to address. Now let's save it. So once this transaction gets saved, we need to just complete and review. Okay, now this is done. Save and close. I will do the create accounting program run. Select the US primary ledger and end date populated the last date of the month. Click on submit. The moment we submit, click on home page, go down to tools, schedule process, refresh the taskbar. Okay, so once this you know uh, program ends, right, this create accounting program ends, we can able to see the accounting entry. Click on receivable, click on billing, go down to the task list, manage transactions. The transaction was on the June 1st. Selecting the June 1st bill to customer is Reliance. Search, select this one. Now go down to the action of view accounting. Okay. Now you can see what is the impact, as we I have already mentioned in the Excel sheet, right? The impact of the accounting entry. Similarly, as you can see, for the month of June, we have raised the invoices to the customer of 3,000. Okay, clear? Okay. Now for this 3,000, as you can see, my revenue for that month, it is fully recognized and it is going down to the revenue account. Okay, the class is also revenue. Now, as you can see, the rest 2 months, my revenue is not recognized, right? It is, next 2 months, subsequent months. What you need to do is basically, you can see over here, system has done for the 2 months, system has created unearned revenue account 2000. Okay. Now, as you can see, on 1st of July, you have got unearned revenue which has been credited and a revenue has become credited. This is debited, this is credited. Why? Because this month our revenue gets recognized. Again, you have another month which is the month of August where the subscription ends. You can see another entry of unearned revenue to the revenue. Okay, so what happens is basically 3 months you have revenue has to be recognized. The first month, since you are doing the billing within the June itself, it is recognized of the first month. Subsequent months, system creates from unearned revenue to revenue in the following dates of that particular month. This is August, this is July. Okay, please note down here the accounting impact, right? Every month it is doing the revenue recognitions. So you can see this is your accounting impact of bills in advance. Okay, now let us see the view image. So you can see the invoice over here, what we are going to invoice to the customer. Okay, now you can see over here, this is 3,000, this is bill to customer, right? Bill to and ship to same Airlines India Limited. This is the billing information. You are doing the billing as on 1st of June. Okay, and the description is as you can see, 3 months service, and this is 3,000. Okay, so this is how more of like you can create a bills in advance, kind of a invoice wherever there is a requirement of those kind of a business scenario requirement in terms of your business. And here in the action you can see, if you want to review installment you can do, review distribution you can do so. Anything like credit transactions, further all these informations are available. If you want to review distribution, you can see. Okay. 33% each, okay, every month. So this is the accounting entry you can see in the distributions. Okay, perfect. So now we are going to see the deferred one. Okay, so bills in arrears and advance, the deferred one, how it works in the system. Provided your business unit, the source and the type. So say for example, I've started this in the month of June first. Provide your customer name here. Provide description. Something you can provide, rental or something. Just given as example, 666 I'm providing. Okay. Now I'm going down to the revenue scheduling. So we have two types of schedule as I discussed mentioned earlier, right? No, we have not chosen here anything. So in advance, let's choose it. Now select the revenue scheduling. Click on the down below. Okay. Now as you can see, I'm going to select this one, 3 months deferred. Okay. Select this one, 1st of June. Save it. Provide the remit to address. Save it. Now you can see complete and review. Okay. So 3 months, it's $222, right? Each month. Now let's go down to the action and view accounting. Let me complete the create accounting first. Click on the taskbar. Go down to the create accounting. Click on submit. Okay, so now our program has become submitted. Billing, task list, manage transactions. So we have created as on June. Let us see lines where the customer search. Okay, so this is the one you can see over here 666. Now let us see the accounting entry. Okay, so we have chosen deferred one. Okay, so system has not created any accounting entry as per the last time we have seen, right? Fixed schedule, because we are going to schedule this particular revenue recognition process as per our requirement. Okay. Simply, whenever you are doing this invoice, you can see receivable to unearned revenue 666, right? So, in the month of, as you can see, June, you have created this invoice and send it to your customer, right? So, invoicing part is over. Now, as far as the company is concerned or the organization is concerned, you want to recognize your revenue as per your revenue standard recognition process. Okay. How we are going to, do that? Let us see. Save and close, come out. Click on OK. Click on done. Click on home page. Go down to the revenue. Click on the task list. Manage revenue adjustment. Provided your business unit. Search. Now you can see here 666 is the last one, right? So earlier what you have done, we have done with the fixed one because system calculate as per the fixed schedule. As you can see, Dixon Industries, the Reliance and everything, right? Now this is deferred one because we want to do the revenue recognition as per the deferred accounting standard. Okay, so we need to do it on our own. Okay, so what you need to do is select this particular row. If you want to see the invoice, you can click on over the invoice drop down list. This is the hyperlink, more of like the invoice number where you can see this entire invoice. Okay, now click on done, come out, go down to the manage revenue adjustment, provide your business unit, write the dollar USD zone first, search. Now you can see I'm just selecting over here and okay, the moment you select this entire row, click on schedule revenue. Now you can see over here the moment you have done schedule revenue, right? You have all this information. Select revenue to schedule. Now entire amount you want to schedule it or you want to do it partially, that depends upon you. Okay. So I want to do the full, amount of 666 for the 3 months rule duration. This is the rule is 3 months deferred one. Okay. Once this is done, you can see the accounting entry. It will be happening on as on today, or you can make it on August 1st also. It depends, right? Any of the date. Now this is all ready. You can just click on submit. Click on yes. Okay. Now click on expand the search. Again, do a fresh search. It will take some time because that program will run, revenue recognition program. Now you can see the last one. Earlier the amount was in this one unscheduled. Now it has come down to the scheduled one because we have run the schedule process. Click on the line distribution. Try to understand the accounting entry here. Okay. So 666, you have done the first of all the accounting entry for the invoicing to the customer, right? So it has gone to the unearned revenue in the first month itself, in the month of June. What system does is basically it calculated the revenue as on June, as on July. If you can see revenue to unearned revenue in the month of June, in the July also revenue to unearned revenue, and in the month of August, whatever date you provided, revenue to unearned revenues. Each month it has calculated the accounting entry respectively. Correct? So this is more of like you have done the revenue scheduling for this particular deferred one. Click on home page, go down to the billing again, back to the billing. Let's go down to the manage transactions. Now, click on the June period, first date, Reliance as the customer, search. Click on here 666 which you have created just now. Action. Now again, why it is coming post to ledger? Just click on post to ledger. You can see the accounting impact. Now you can see the full level of entry the moment you have scheduled it, right? Earlier it was only 666 which is receivable to the unearned revenue. Now every month accounting entry of the respective month dates, it has become revenue has been recognized. 222, 222. So June month you have, July month again, August month. So this is how you do the deferred one. Okay. Deferred revenue needs to be calculated in part of on part of your either, I mean, the process remains same for both bills in arrears and advance. Thank you. Keep watching my channel and do subscribe my channel.